started out this segment by saying that interest rates are going higher. Interest rates are going higher because they're trying to battle inflation, right? So if the Fed is successful in doing that, you might see oil come in. But for all the reasons that Pete and Guy just mentioned, you might see it stay elevated, right, in an elevated rate environment. But you might see that situation that we've been talking about a little bit with stagflation because it hits growth. And you know what? We have some data here. Last night, Marko Kolanovic came on from J.P. Morgan. He said he thinks that you could see crude oil at $150 this year, but you could also see the S&P 500 back to its highs. That would make it basically unchanged on the year. At its lows, it was down 20% a couple weeks ago. Right now, it's down 13.5%. I do not see that happening. If you look at 50 years of data, every time you have seen crude oil rise 50% above its trend, and that goes back to 08, 2000, 1990, you know the math, 1980, 1974, a recession followed, and that's why I think stocks really should not be focused on the 5% of the group that's doing really well. They should be registering all of these companies that are starting to lay off, companies that are starting to guide down, that are starting to get worried about the dollar.